Sure. So ultimately, I think the reason to pay attention to macro is because it drives a lot of the price action. When you look at indexes or asset classes at large, say stocks, bonds, commodities, and currencies, macro is really what drives everything. And even down at the single security level, macro can drive upward of 70% of the price action in certain regimes. So if you want to know what's going on, even if you're a single security analyst, a bottom-up investor, understanding the macro can give you a great advantage over your peers, and it can be a huge liability if you don't pay attention to it. So in my mind, understanding the business cycle has something to offer everyone.
Yeah. I'm talking to a lot of PEs recently, and they are interested in macro, and but they always kind of compare it a little bit to voodoo. So like it's a little bit fuzzy. People don't, fully understand it. Like, what's your process? Like, how would you answer that? How would you respond to that?
So I think macroeconomic analysis has a reputation for being esoteric or difficult to understand. And I think that reputation is propagated by certain participants in the industry that benefit from being difficult to understand and using challenging jargon and sort of using verbal, a sleight of hand to make it sound like they're always right, even when they're not saying something very specific. And even though macroeconomic analysis is not easy, it's hard, it is simple. In other words, the fundamental drivers of the business cycle and the fundamental drivers of asset class price performance are relatively simple. It really comes down to the real growth cycle, the inflation cycle, and the monetary policy cycle. And those three subcycles form what we call at Victus the larger business cycle. And the business cycle is really what drives everything. It has a somewhat predictable sequence. It has leading indicators that you can use. It follows economic logic, linkages between different parts of the economy. And there's also a lot of macroeconomic data too, especially relative to individual companies, right? So if you're looking at Apple, you have the different SEC filings. You can read sell-side reports. Maybe you can use some alternative data. But the truth is, there's so much more data about the overall economy. It's anything but voodoo. It's very quantitative. It's very it's based in economic theory where there's long academic track records and validations for different ideas. So, like I said, I think it's anything but voodoo. It's possibly the most important thing when you're thinking about what actually drives the price action for given securities or asset classes.